Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. We got a really surprising update from SolarEdge after the market closed on Thursday, and the market did not have a good reaction. Stock is down 21% as I'm recording after hours, and this really just confirms a lot of the things that I've been covering on this channel, that the solar supplier space is going to have a really tough 2023 and probably into 2024. So I want to give an update on exactly what we learned and how to think about SolarEdge and Enphase in the future. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to thank this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I'll just quickly show the stock chart after hours because this is pretty jarring. You can see that shares were down about 6% in trading today and then down 21.2% a few hours after the market closed. So just a terrible reaction to the update that SolarEdge gave. And here's the release. They said that third quarter revenue is now expected to be in the range of $720 to $730 million from a previous range of $880 to $920 million. So in just a couple of months, they had about $150 million of lost sales. They said there was cancellations. A lot of European distributors were pulling back on their orders. As a result, gross margin is expected to be 19 to 20%, and non-GAAP gross margin, which is something that investors watch a little bit more closely, is going to be 20.1 to 21.1% compared to previous expectation of 28 to 31%. So this was a very high margin company, and those margins look like they're going to be coming down to a much more modest level. Gross operating loss is now expected to be $9 million to $28 million, and non-GAAP operating income expected to be $12 to $31 million compared to a previous expectation of $115 to $135 million. So basically, SolarEdge just said that we're going to go from being an extremely profitable company just a few quarters ago to basically break even, or just barely better than break even on a non-GAAP operating level for the quarter. So what exactly has happened? Well, the big story is that interest rates are up. Most solar projects, whether you're talking about something on somebody's roof or a major utility scale installation, they're financed with debt. So if debt goes from 4% to 8 or 9%, suddenly those projects get much, much more expensive. The cash flows that you expect from those projects are now suddenly less valuable because these projects are financed over 20 or 30 years. The problem with SolarEdge's market specifically is that they're residential solar. So the turnaround time is relatively quick, on the order of a month or two between the time you sell a system and when it's actually installed. So when interest rates go up significantly, you don't have contracted backlog of 6 months or a year like you might have if you're a utility scale developer with those residential solar installations. So demand can just fall through the floor as rates rise. And that looks like exactly what is happening both in the US, in Europe, and around the world. And we're seeing this across the board. We saw Maxion Solar Technologies, which is SunPower's spinoff, warn investors just a few days ago that they were expecting a weak quarter. SunPower has said that they expect a weak quarter and a weak second half of the year. So for the residential solar space, demand overall is going to be down because it's much harder to make these projects make sense. You have to adjust somewhere. You have to either lower your installation costs, which would hurt SolarEdge's margins, or you have to raise the price of electricity for your customers. And that may be something that ends up happening over time, but customers aren't going to adjust to that in a matter of a few weeks. That's going to take 6 months, a year, 2 years to really flow through the system and adjust expectations from a pricing perspective. So you add all of this up and you get pressure from both a volume standpoint and a pricing standpoint on a supplier like SolarEdge. We're going to see the same thing with Enphase. That's why Enphase's shares were down as well on Thursday after the market closed. The other thing worth noting for SolarEdge is the fact that we've seen reduced demand for electric vehicles. Now, this may not seem like it's something that's going to directly impact the company, but there's really two impacts. One, there seems to be a correlation between people who would install a solar system on their roof and people who would buy electric vehicles. So if the number of people who are buying electric vehicles isn't rising as quickly as we maybe thought in the past, then that's maybe not good for solar energy installers. The other thing is that electric vehicles were really a driver of this brains of the system concept that SolarEdge was going to benefit from. So adding batteries and an electric charger. And then SolarEdge was going to be the company that controls all that. So that was going to make them a much more valuable hub in the smart energy system. If people aren't buying electric vehicles in the same numbers as we thought in the past, maybe that opportunity, particularly in batteries, isn't going to be as big as we thought. So those are kind of pouring cold. So those are really impacting expectations for SolarEdge's growth. We have already seen SunPower and Sunrun get just absolutely destroyed on the market. So this is going to be a rough second half of 2023, and through the winter season and into 2024, we probably won't see a marked improvement in their operations until at least the middle of next year. That's when they're going to be able to adjust pricing on the installation side. So the first place you're going to see a recovery is not with SolarEdge or Enphase. You're going to see a recovery with a SunPower, with a Sunrun, where they're going to say, okay, we have raised our prices or reduced our cost to make these systems make sense. And now we're starting to see an increase in volume. That's what you want to see, is those installers increase their volume. Now, if they're increasing their volume, then that demand gets pushed to suppliers, whether that's module level power electronics, whether that's batteries, whether that's inverters and solar panels. If those installers aren't putting anything in, then nobody's business really works. The question is going to be, what do margins look like going forward? Because I think the higher interest rate environment is ultimately going to put a lot of pressure on margins. SolarEdge was one of the companies that had extremely high margins for the solar industry. And one of the things that a lot of investors don't know is the microinverter, which would be what Enphase makes, or the power optimizer, which is what SolarEdge makes, is now the most expensive piece of the solar system. It's actually more expensive than the solar panel itself. So where are you going to put pressure? If you're an installer, you're going to put it on the companies that are making the most money. You're going to look for alternatives. You're going to ask for lower prices. And that's what we're starting to see. That's where you're starting to see those margins come down to 20%. That's something that we haven't seen from SolarEdge in a long time. So it's going to be a rough quarter for SolarEdge, and I just don't see recovery soon. I see a lot of investors talking about this being a buying opportunity. I don't think this is going to be a buying opportunity until we start to see installers actually increase what they're putting in the ground. And that probably isn't going to happen until at least 6 months or a year from now. So look at what SolarEdge is doing, but don't forget to look at what those installers say and what their guidance is for both the fourth quarter and then into 2024, because that's going to tell us what the end user demand is. And that's going to ultimately drive SolarEdge and all these suppliers in the future. So rough day for SolarEdge. Don't be surprised if the pain is not over for this stock. And like I've been covering for a while on this channel, those suppliers and the residential industry overall is going to be in for a little bit of a rough patch here. I think we will see a recovery eventually, but it may not look exactly like it did over the last few years. Margins may come down overall from a structural standpoint. But what do you think about the announcement from SolarEdge? Leave your comments in the comment section below. Don't forget to subscribe to asymmetric investing. Thanks for watching, everybody. See you here next time.